Hello traders, Day Trader Matt here of businesswithtrading.com, doing a trading strategy recap for Tuesday the 30th of June. This is also the monthly recap of June. So it's only fitting that we had the worst day of our month so far. Why not? Let's just have a shitty month. Obviously this wasn't planned, but it happens. So let's talk about it. We had two trades and we dropped both of them. So we dropped 8 points today. We still have a lot of money in the bag, so we didn't give back a whole lot. We had a big cushion. We're going to talk about that a little bit later. Our trades, though, we decided, we saw the market come down, start to chop around, and we started looking for a long. And it was right here. I was like, alright, this looks good, let's get long. And then the market said, okay, that was a bad idea. Shouldn't have done that. It is what it is. Some trades you make money on, some trades you don't. And this was one of them. So, price then started to chop around some more. And moved up a little bit. And we were talking about trying to short this thing. And it did pop up. We never put an order out, so it's one of those things. We're talking about shorting over here. Never put any orders out. Market did jump up, and then it started to come down a little bit. So I was thinking it would probably get one more move up, and then we would be able to short that. And decided to get long. Maybe price actually does move up. We can take our profits and short it. So we got long right in here. Price did actually go in our favor a little bit. It wasn't as much as what I was thinking, and then it just rolled over and stopped us out. So that gave us 2 stop outs for the day, and we dropped 8 points. So it was our worst day of the month, probably the worst day of 2015. It is what it is. End of month, actually end of the quarter, end of the half of the year. A lot of fund managers like to take half of the year and look at the first half versus the second half, or look on a quarter by quarter basis, and then also look on a half by half basis to kind of calculate their stats and whatnot. That obviously had nothing to do with why we lost money. It's just an extra thing to talk about. Why did we lose this money? Well, the first trade, probably shouldn't have happened. But at the time, it looked like a pretty good chance of seeing some support and seeing price actually push up. It did struggle up here once it did push up slightly, and then it did start to roll over. And at that time, it's kind of just there. Price did come down, hit our stop, and then chop around and then move lower. So that's basically what happened there. Here, I was thinking, yeah, it should buy up one more time and give us the ability to take profit and short. Wasn't a bad thesis, but price could not get over a key level that I was looking at. I was like, it really needs to get over this area, and I thought it could at the time. Obviously hindsight is always 20/20. And what I really wanted to talk about today is, a lot of traders, if they lose money, it's like someone stabbed them in the heart. And yeah, if you're walking in a park and someone totally robs you, then yeah, you have a right to feel like that. But when you're actually trading, it's like being a professional poker player, for example. If you've ever watched the World Series of Poker, which most of you probably have, I have. I used to enjoy it when I was younger. I haven't really watched it lately, but when I was younger, I used to enjoy it. People like Johnny Chan and stuff like that. People like that, Phil Gordon. And I would watch them and how they actually played the game and how they looked at certain situations, and it was interesting to me. And trading is the same exact way. You know, if you lose money on a trade, that's all that it is a trade. You didn't lose your entire account. If you're risking your entire account on every single trade, then yeah, there's a big problem there. But you should be risking a small fraction of your account on every single trade. Therefore, it's not really that big of a deal. That's how things should be. So that's what I always look at. That's why I always say you want to have consistency, because in having that consistency, you should have a cushion, so that way when you do lose a little bit of money, it's not really that big of a deal. Now, if you have zero profits and you lose 8 points, and then say you lose another 8 points, and then you lose 10 points, and then you lose another 18 points, there's a much larger issue there. And it's something that really needs to be looked at. But if you're consistently making, 2, 3, 8, 10 points, and then you lose 8 points like today, it's not really that big of a deal. So let's talk about what we actually did today. Okay, so now let's look at the monthly numbers, what we actually did, what we were able to do. This includes today's loss. So we had 60 trades total in our E-mini trading room. I'm not sure why it says ETM. Let's call it ETR, E-mini trading room. We were 46 and 14 with a 76.6% success rate. And we made 78 and 3/4 points. Not too bad. And in our options group, we made 12 trades. We were 10 for 2, which is actually an 83.3% success rate. We risked $14.64. We made profit of $19.61, and if you want to get technical, $19.61 and 167. That's basically what we made if you want to get technical. And our profit came to $4.97, blah 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 blah, which we can just round down and say $4.97, which basically comes to a 33.96% return on our risk capital. Not too bad. And that's what we look for, is something high. 33.96% is okay. We, strive for a little bit higher than that. But they say that if you reach for the stars, you're going to probably hit the moon. That's a common saying. And it goes really in tandem with what we look for. I try to get, 50, 100%. That's where I try to be around. So I'm happy with 33.96%. Our average, savings account, really not good. CDs, maybe get 3-4% if you go out longer term. So 33.96% return on your risk capital, always a good thing. And that's what we look for. Our future swing trade group, we made 10 trades, and this is assuming a maximum of 2 contracts per trade. We made $6,462.50. So imagine if that was not just 2 contracts, but 10 or 20. That's really where trading becomes very interesting. It's when you get your core methodology and you know what you're doing, and then you're able to just scale it. And be able to say, okay, I'm trading 2 contracts, now I want to trade 5. Now I want to trade 10. Now 15, now 20. And the sky's really the limit. How much do you want to make? Where do you want to go? What do you want your trading to do for you? That's basically what it comes down to. So 10 trades, we lost money on 1 trade, which was a gold trade. We lost $900. Our largest winner was the dollar. We made 1 trade with the dollar, $3,000. 2 soybean trades, $1,450. One live cattle trade, $1,200. Actually highlighted that on one of our strategy recaps. I think we also highlighted the cotton trade. One trade there for $800. Two cocoa trades for $600. And we made a 90% success rate because we made 10 trades and we lost money on one of them. Is every month going to be phenomenal like that? Probably not. Hitting a 90% success rate in a month, isn't really my main goal. And it's usually not something that happens. I always tell people, that ask me, where, what success rate do you usually get? And they usually use different terms, but we know what we're talking about. I always tell them I try to be around 60 to 80%. And that's my sweet spot. We get outside of that to the upside. Yeah, I'm really happy if that happens. But, there are times when we are around 40, 50%. But for the most part, and on average, throughout the life of the service, we're around 60 to 80%. With the E-mini trading room, usually we hang out around the upper 70% range, or I'd say 73, 78% is usually where we hang out at. Every now and then we hit 80 something, but usually around 73, 78%. This time we were at 76.6%. Our option service 83.3%. Again, usually hangs out around 60 to 80%. If it gets over that, it's always good. But again, the percentages isn't really what I'm looking for. And baseball, if you have a 300 batting average, if you're hitting 30%, you can go to the Hall of Fame. In trading, it's the same exact way. But if you're hitting 80% of your pitches, it's even better. If you're using good, proper risk reward, or reward to risk. I like to put reward first because I think it makes it a better term, calling it reward to risk. Because we focus on our risk, but you don't want to make it sound negative by putting risk first. Because risk is important to focus on, but if you're not hitting your reward targets, it really doesn't mean anything. You're like, oh, I'm using very tight risk, but I'm taking profit way too early. That doesn't really help me. So you have to have accurate reward goals with your risk. So, and we highlight a lot of our future swing trades. You can go to my YouTube channel, check a lot of them out. We're hitting, 4 to 1 reward to risk, 5 to 1, 6 to 1, 10 to 1. And that's what we're actually looking for. That's what we strive for. And we try to keep tight risk. $900 isn't really tight risk, but we were already up quite a bit. So that was one of the things we could, take a little bit more. So we risked 4.5 points on a 2 contract trade. That's where we got 9 points down. So that's basically how it is. So anyway, hopefully you guys enjoy this. If there's a different format you would like to see me use, put it in the comments below. You can also email me directly, support@abusinesswithtrading.com. If you go to the website, abusinesswithtrading.com, contact form, there's a phone number. You can give me a call as well. Either way you'd like to contact me. Twitter handle, DayTraderMatt. I've been getting a lot of comments via Twitter, and that's fine too. However you want to contact me is fine. That's why I'm on all the platforms, have a contact page, stuff like that. With that, thanks for watching. Have a great rest of your day. I'll see you back here in the markets. Thank you.